Congratulations on reaching the first day in 9 straight days of no manipulation. It truly is interesting to see what the asset is capable of when outside of the grips of foul play. But is this actually the floor? Can price continue from this point? Welcome back to the channel on this Thunder Thursday. This is ARCa, and let's dive into ticker symbol FNGR. Let's kill them, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol FNGR. And what you're observing here is actually the chart that we've been keeping track of regarding manipulation, right? So we have all of these dates here of straight manipulation, right? Except for today. Finally, one day without manipulation, and the asset tends to go up. Very interesting here. Okay, so what I want to point out here is, or actually not point out, I think we should really go over some potentials here, okay? Because there could be some additional messing around of the price action, right? I don't want to put it like that, but it's just we have to always be kind of weary and sharp here, right? So now regarding the target that we were talking about yesterday at about 451. Definitely didn't get that today, and it feels like we would have. It feels like we could have just stuck to the initial analysis that we had regarding the 483 bottom, where if I adjust the trend line back to how we had it before, it looks like, let's see, yeah, it looks like we pretty much had touched the bottom there, right? So I want to believe it, right? I really do want to believe it. It's just a couple things that are in the way here that are very, very tough. For example, the 4-hour time frame EMA 21 is right above us right here, right? That's why we're resisting where we are, which is at about 557. Next thing we have is the very tough, of course, the SMA 200 at around 570. And then the 4-hour time frame SMA 100 and EMA 55 at around 586. I mean, if you need to know where the SMA 50 is located at around 608. But I want to point that out because these are very difficult moving averages to get over. So let's move on to the next chart here. And yeah, so this was the right-angled broadening descending broadening wedge that I spoke of, and I also modified the bottom side of the regression here. But if we adjust this the way we were talking about with the contact points here, then this bottom side starts to look more apparent, right? So let's go ahead and do that now. So there you go, right? So we have that contact there, and of course this bottom side here was that what I guess I did speak about a 478 potential, right? I think it was 478 to around 485 or something like that total range. Right, so price action came down to that 480. It actually faced the bounce side. It actually faced the bounce zone here. I mean, just shy of it, 2 cents shy, and then it continued to the upside. And this is the entire day today, right? So massive, massive upside. Okay, so there is a resistance here at 577. We just mentioned that in the chart before this. Being the SMA 2, well, I guess the SMA 200 is located at around 570, and the SMA 100 located at 587. So I guess in some way, shape, or form, it is correlated to the 4-hour SMA 200, right? At least this resistance right here. Now, if let's just go ahead and keep it like that. Okay, team. So yeah, that's what's happening here, right? So if we count let's see. So we have test number 1 here, 2 and 3. Then this next test would be around test number 4 at around 577. So there could be a pullback there. Sure, there could be a pullback from 574 back down to 555. And then we could actually attempt to continue onwards and breaking out of this channel in which, or the wedge, right, in which we would test the top side of around $6 and revert back to 578 to validate that support. That's technically how things would go. Okay, but I want us to be sharp. I don't want us to just fall for anything here, right? So let's take a look at this because I want to give you also a potential bear thesis, okay? So this is I guess this could be considered I really would like the handle to be located here, but this is kind of an inverted cup and handle, right? So if you were to I'm gonna show you like this, right? So something like this. Just bear with me here, right? And we'll go ahead and just take it like this, right? So this is kind of an inverted cup and handle here, and the take profit for that cup and handle would actually be down to around 417, right? So it rejected from here, but that doesn't mean that it's over. The reason why I'm saying this is because if we are playing a cup and handle here, then let's go ahead and play this. Let's go ahead and really chart this out, okay? We need to know this because we need to protect ourselves, right? We can't just know how to play the offense and not know the defense in the game. We need to know where we could potentially get trapped. Okay, so first of all, this is the bottom side of the cup, right? So, and then I'm sorry, the handle, and then also the bottom side of the cup right here too. And the price action is at that resistance right now. Now, if you're looking at these candles right up here, that is 578, which is actually the resistance that we were just talking about right up here, 578 or 577. So we expected a pullback from that area there to come back and test the 555, right? So if we're looking at here, there is a chance that we could face that 578 and then come back to test the 555 as a support before continuing to the upside. But know for a fact that this cup and handle does have a lower price objective. So meaning that you get the cup, you get the handle, you get the cup, you break below the support, and then you come back and test that newly converted resistance, or what was a support, into a resistance in order for us to get the downside. So this is typically what happens, right? So when you have a critical support here, you bounce off of it, you fail it, you come back and test it, and then you realize it, right? So that could be a potential danger. So I want you guys to be careful with what that is. Okay, this is not set to be a bear play. This is set to actually have the bulls protect themselves against a potential bear play. Okay, so just in the event that that could happen, that's located right there. Now, if I draw a perfect regression from the wick low here to this wick low, then this kind of, I mean, in all reality, it would be something more like this here, right? So it does have some correlation to it, right? So 426 to around 417. So it's not bad, right? So it is kind of following that in the grand scheme of things here, right? So let's see if I can. I mean, I really want to get as creative as I can here, right, team? But it's very difficult to really call out so many formations because formations are not usually the best thing, right? So I mean, the target that we're facing at 480, sure, we've used it several times for huge bounces to the upside. So I mean, obviously, this could be one of those iterations, right? I mean, we did talk about how relevant that 483 was, right? So it's curious that it did play out the way we were initially talking about anyway. But I want us to protect ourselves against these potential plays. Now, I want you to also notice here that this is the ARQ sniper, right? So just like the one that we were viewing over here, this indicator is ARQ composure. This is part of the 8 algorithms that got released as pre-orders for the for our algos here. So we noted today, in the early part of the AM, that we got a long signal here, and I called it out. I said, you know what, guys? ARQ Sniper actually printed a long signal here, and we're now moving upside of VWAP. So now that we got this run to the upside, actually, I mean, this was a huge move from the opening of the candle at 495. This definitely printed that long signal, and it respected it all the way. We're getting a short signal printed right up here. Now, granted, the short signal was printed at the opening of this candle being 548, and we already have this one large green candle happening here, right? So I get it. I get it. I want to also keep that in mind. The fact that it is giving us an early warning right now. So I'm not sure if this is actually going to send it to the downside, but it is an early warning. Okay, so not every signal is perfect. There could be false signals, but we're trying to, we've been trying to really remove the false signals from these indicators and algorithms in the first place. So we've been trying to refine that as we move, through time. So I would have to give it some credibility here to see if there could be a potential drop. Okay, but let's continue on the analysis here. So this is another reason why there could be some type of pullback too. The fact here is that we bounced from the SMA 100 on the daily time frame, and now we're getting a clean resistance from the EMA 55 on the daily time frame. So what I do like is that presently we are holding the 2-spot 618 at 544 as a type of support, right? Because in the after hours, you can see that we close at 555. So 555 is actually still just under the EMA 55 on the daily, right? So that's another thing that we have to keep in mind. So yeah, I just want us to protect ourselves, team. I want us to make sure that we can still look at what these probabilities are, right? So now if we're looking at the bi-weekly Gaussian channel, you can see that the bi-weekly came out and opened this candle right up here at 610, and we essentially came back down. So this is still has 7 days and 15 hours to close, right, which is still fairly new. But this, if we can close this bi-weekly candle in 7 days above the prior bar's low, which could be anywhere upside of 550, anywhere upside of 556. If we can close this candle like that, that would print a massive hammer candle here, and that could indicate a continuation to the upside. Because right now, sitting under this the regression band or the Gaussian band top band, sitting under that is still kind of dangerous, right? And it can introduce some downside targets. All right, team. So yeah, let's go ahead and look at the RSI now and see what we have in play, at least for the immediate short term, because I would think that this is something that everybody should be curious of no matter what, right? Because overall, we can tell resistances and supports based on just the RSI here, right? So let's go ahead and just take a look at the 30-minute time frame here, making a very bullish crossover upside of the SMA 14. And looking pretty promising here. So now the bi-hourly time frame is also making an upside shift here, and this is beyond the gravitational zone. So it looks like there could still be some upside to go. Now the 4-hour time frame is in the gravitational zone right now, very likely to get pulled up. Now let's see this one here. The 6-hour time frame is approaching the gravitational zone, so the 4-hour time frame will essentially introduce the continuation to the upside on this 6-hour. And there is a bullish crossover on the 12-hour time frame. It's currently in the process of making or converting that SMA 14 into a support. You can see that crossover here. The signal is crossing above it, right? And now I know that the daily and the bi-daily have not read whatever just happened to the after hours, right? Because this pump to the upside happened right around then. And but what I would say is that, let me see the daily. Yeah, what I would say is that the daily time frame could actually be sitting right now in the gravitational zone and the resistance of the SMA 14, similar to what we're looking at within the moving averages in this in this page here, right? So we're looking at the EMA 21 at 557 here, potential 570 of the SMA 200 on the 4-hour time frame. So I'm thinking that we could be right there on the daily time frame RSI. So if that is the case, that can present a danger, because this is a gravitational zone here, and that is to pull us to the downside. So gravitational resistance and SMA 14 resistance together. Okay, so we would have to actually see what's going to happen into tomorrow. Very difficult to see what can happen into tomorrow, but I can say that it looks bullish, but I will also be lying to you if I didn't present the immediate dangers within this. And it's just like this every single time we bounce to the upside. Every single time we bounce to the upside, there is that danger. But I have to say that, we've called bear traps at these points too, right? So it's looking okay. Let's just go ahead and make sure that we can keep track of this, and yeah, I mean, we'll see what happens on Friday, which is tomorrow, or now for a lot of you is already today, right? So yeah, you know the targets, you know the risks, and you know the upside potentials too, right? So I just remember, team, let's just make sure that we can keep that risk management in play. All right. So, yeah, just one more thing, team, of course, right? We only have about 5 seats left in the ArcMasters course. So this is a 16-week mentorship that's going to be starting in, I think, the second week of November on a Saturday, and it would be around 9 to 10 a.m. Pacific time. Okay, so just make sure to get your information in. I'm sorry, or your email in, so that I can give you the information and you can make that decision about getting enrolled to this. Okay, team. So please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good night. And I shall catch you at the bell mañana. Adios.